here in the city with Phil McHugh, who's the trading floor manager with Currencies Direct. Hello, Phil.
Hello.
Well, as the year rapidly nears its end, we're finding ourselves in an environment where the key risks, which have prevailed seemingly forever, certainly for the last 6 months, are still here, aren't they? We've got the US fiscal cliff forever looming, as everybody keeps saying, and the Eurozone and China, of course, being two more. But arguably those last two things, China and Europe, have been seeing some improvement. Would you broadly agree with that?
Yes, definitely, I broadly agree. I mean, if you look at China, there was some concern on the economic data. It was very jittery. The PMIs have seemed to have brought some comfort back to the markets, and that's really led into an appetite for more risk, even in the backdrop of the fiscal cliff, which is quite encouraging, really. But obviously, we're not there yet in a full risk-on environment, but we have sort of edged that way.
And China, do you think China's now really on the road to recovery as far as growth is concerned? It's looking a bit healthier.
It's looking healthier. I think we should still take a little bit of caution with economic data moving forward, but certainly the manufacturing data was encouraging, and that is a sign that their economy is picking up, and essentially that should lead into better growth numbers as we move into 2013. So it's definitely a good sign, and that's what the market's really sort of taken encouragement from.
And often, as happens at the end of the year, with volumes the way they are and people doing their year-end reconciliations, you would still be cautious with data the way that it tends to seesaw, especially at this time of the year, I think, and it's difficult sometimes to get a true reading of what that data is telling us.
That's right. You have to take a holistic view of data, and not one swallow doesn't make a summer, and one piece of economic data cannot be relied upon for an overall trend. So if you look at the UK PMIs, that was very mixed in terms of manufacturing against construction. You've got to still view the whole economic climate at the moment is still very up and down, and we need to keep cautious overall, really.
You mentioned there the UK PMIs, and that sort of brings me to cable. It's at its highest since November the 2nd. At this current time, it's around 161.
Yes.
Where do you think we're heading with that, with the pair?
Well, it is very interesting to see. We've seen some pronounced dollar weakness coming into the market. We've seen euro dollar also move higher, and it does seem as though the market at the moment is pricing in an agreement for the fiscal cliff, which is quite incredible, really, to see, due to the fact that the parties at the moment are still very polarised. So I think the consensus really is based on the fiscal cliff. That's dominating the short-term outlook, and at the moment, with the backdrop of more encouraging steps for Europe, the Chinese economic data, we're definitely moved into a risk-on environment, and that is causing the dollar to sell off. And I can see in the short term potentially getting towards 162. Euro dollar may be targeting September, and then previously the February highs. If we get some agreement on the fiscal cliff, we could see some good moves on euro dollar and sterling dollar. So it's definitely one to look out for and to monitor very, very cautiously.
Yeah, we've got non-farm payrolls coming this Friday. Now, this all weighs on people's sentiment regarding this fiscal cliff, and it keeps getting in the way. It has been doing for a few months now, but are we really? Could America really go over the edge and then haul itself back? I mean, it's looking that could be a sort of unavoidable scenario as we get to.
Well, it could be. I mean, they left it very close to the wire last year when they had similar concerns.
They had their AAA rating.
That's right. Yes. So it's certainly something I think the market at the moment is pricing in an agreement. It seems to be quite happy to let the dollar sell off, and it seems in a risk-on environment. But I think if I was an investor, I would be very cautious about that as we go towards the date. If we're still seeing polarisation between opinions and no agreement formed, I would be looking to see the dollar strengthen back in. I think if we do go over the cliff, it's going to be dollar positive, bond positive, equities are going to fall, and we'll fall into a risk-off environment. that could also affect your sort of beta currencies such as the Aussie, Kiwi.
Yes.
So it's definitely something to bear in mind. It could be an event that people look at as a view rather than what the market's telling us at the moment.
Interesting, and also the yen. It's going to be even harder squeezed.
Yeah, the yen's a tricky one really, because it's getting pulled obviously weaker at the moment with the approaching election. Will we see an unlimited Bank of Japan?
Yes.
Which would be incredible really. That would change the dynamics again. It would fuel a lot of risk appetite and potentially gold rally on the back of that as well. But it's going to be a close call, so
yes.
we'll have to see on that. I think with the fiscal cliff in the yen, if we do see sort of a close, really a lack of action right up to the date, I think you will see some yen strength,
right,
as opposed to the weakness we're seeing at the moment.
So a dollar yen exchange rate at 85 by the end of the year.
If we get if we get the election of an unlimited Bank of Japan, yes, absolutely.
And
I think
really
long
likely, is
it is at the moment, but it's becoming a little bit closer. But yes, I think we definitely will see a long-term sentiment that will move into a weaker yen, whereas previously we've always seen a jittery, haphazard approach to trying to weaken the yen. A lot of rhetoric, but nothing really substantial. Whereas now, if this does occur, I think you will see some yen weakness. I think that will be definitely very evident. And also, we're unlikely to see any easing from Europe in the near term, so you might see quite a bit of yen weakness against the euro.
And the euro dollar, some people are saying it's going to be pushing 131. Is that?
Well, absolutely. I mean, it's not too far off at the moment.
No.
You know, you've had some good news. It seems like the ECB are backing the euro up, and I think psychologically that is really helping. I think you've seen the cost of borrowing for the peripheral countries come down sharply. So it seems that although the can's been kicked down the road again, it does seem as though the investors and the market participants are looking at the euro with a different light at the moment, and it's kind of turned the tables really. It's gone from the sort of rejected currency that no one would touch to a currency that people are thinking, right, this is an opportunity now. So a lot of people are bullish on the euro at the moment.
Well, there aren't that many events now to look at this side of the new year. We've got Spain is done the inevitable, and Germany seems to be more sanguine around the Greek bailout and any haircuts. So all's happy on that front.
Well, that's right. There's been some compromise from Germany, which is what everyone's been looking for, and you know, the debt bond buyback scheme seems like a good idea for Greece.
Yes.
It's quite cleverly done in the Dutch auction format. So I think, all things equal, now the euro is definitely short-term looking positive. So it's certainly turned the corner.
Any other things we should be looking out for before the year end?
Well, I think for sterling, obviously you've got to look at the autumn statement. I think that's likely not to be very festive, and it's going to be looking at a longer-term reduction, plan for cutting the deficit, also more cuts. But I think sterling's going to be cloudy. I think we're going to remain fairly neutral, so I wouldn't worry too much about that. I think the big things are euro. Short term, that's quite bullish. Obviously, it's gained already quite substantially, so you just want to be careful on too much sort of buying. And also the yen over the election, that's a big one to look at. The problem is they could swing either way, but certainly if we see an unlimited Bank of Japan, if the opposition party are successfully in, then that's definitely a sell. And then obviously you have the fiscal cliff. If we see an agreement on that, then the market will continue in that risk on mode. That would be dollar negative. If we see a failure in the talks, then obviously that will turn the trend, and we'll see a yen rebounding, plus some US dollar strength as well.
Very interesting. So there's still plenty to keep us interested up until the point where we all go away for Christmas.
There's certainly a lot on the table at the moment, and it's sort of an unprecedented market still. And I think going into next year, if we get beyond the fiscal cliff, it will still be then dominated by central banks as well.
We'll come back and see you then.
Yes,
so
exactly.
Thank you very much for your time.
No, pleasure.
Thank you.